He wanted it, and then he didn't want it, and then he was forced to buy it, and then he said it might be close to bankruptcy, and now he says it's had the best day in years. So he goes back and forth, and again, that's indicative of his communication style. I don't necessarily mean to attack him for it, but irrespective of that, it does have implications for Tesla stock, and they are quite serious. I think one of the implications, JD, is the fact that if the Twitter platform is going to engender mistrust amongst the advertising base, that has profitability concerns. And that, of course, engenders mistrust with regards to the lenders. And the lenders, we have heard reports, are wanting further stock pledged against their loans in order to mitigate their risk. And that, of course, could trigger further sales of Tesla stock. We saw him selling 22 million shares last week, generated 3.6 billion. He sold 40 billion worth of stock already so far this year. If the lenders want more stock pledged against the declining value of their loans and bonds, he may be forced to do more share sales into next year, right after or right before the fourth quarter earnings and delivery numbers, and that could have significant consequences. The stock has shed hundreds of billions in value so far this year. It's actually elicited rare criticism from some of his biggest defenders and indeed some of his biggest individual shareholders, which is something we really haven't seen since the inception of the company in 2010. So the fortunes of the two companies are absolutely tied together, even if they are working in markets that really don't have any particular correlation.